Good afternoon and welcome to the second tutoring session for part 2 of Chapter 4 for Principles Accounting 1. This video is going to be over closing entries, okay? So we just learned how to do adjusting entries, okay? So now we're going to deal with closing entries, okay? And the big idea of closing entries is you're going to take the balance from your revenues and expenses and put them into retained earnings, okay? And then out of retained earnings, you pay dividends, okay? So this diagram on the board I'm going to refer to a little bit while we're doing a problem, okay? So go ahead and get ready. We're going to go to exercise 413 on page 207, okay? And let's just get started. So what they give you is an adjusted trial balance, okay? So what you're going to do is the first thing you're going to do is you're going to look down all of these accounts. You see they have supplies, prepaid insurance, and it goes down, okay? So the first thing you want to do is pick out all of your revenue accounts, okay? So let's just look down, okay? And a lot of people make the first mistake of saying unearned service revenue. Well, as we learned in the previous video, unearned service revenue is a liability, okay? Because when someone pays you, they prepay you for something, you have a liability to perform the action they've paid you for, okay? So unearned service revenue isn't a revenue account, okay? It's a liability, okay? So that's not a revenue account. Okay, the first one I see, and I think the only one I see, is service revenue. Okay, so what you're going to do is you're going to close out the service revenue account. Okay, and I have written here that revenues have a credit normal balance. Okay, so what we're doing big picture is we are going to journalize the service revenue account and credit the balance to income summary. Okay. Because when you close your revenues to income summary, you increase income summary, okay? And income summary is just a little account that's open for a blink of an eye as you're getting ready to put all your revenues, expenses into retained earnings, okay? So for the first one, we take service revenue, which is a debit of $4,000, okay? So your debit is service revenue, and you're going to credit income summary for $4,000, okay? And what that does is it puts $4,000 into income summary, okay? So if we're going to do our income summary ledger right here, okay, we just put $4,000 into it, okay? Okay? So the second thing you're going to do, now that we've closed our revenues, you're going to close your expenses, okay? So you're going to look down, and I see 3 expenses, okay? You've got your supplies expense, which is $950. You've got your insurance expense, which is $520. And you've got your salaries and wage expense, okay? And what expenses do is they debit income summary, okay? So you're going to do what we did right here, except you're going to flip them a little bit, okay? So this is for January 31st. So this is also for January 31st, okay? And what you're going to do is you're debiting income summary because all of these expenses are going to decrease what you eventually get to put in retained earnings, okay? So for closing expense accounts, you'll debit income summary, and I'm not going to write them out just for time's sake, but you would put those 3 accounts, okay, that your expense accounts, okay, that are just listed right there. And the total you should get is $3,270, okay, and that's what those total out to be, okay? So now you have a credit of $4,000 to income summary. Now you have a debit of $3,270, okay? So you have a credit balance of $730, okay, in income summary. That's where this is, okay? Well, if I can write. $730 in income summary, okay? So now what you get to do is you're going to close out the income summary account, okay? And what I mean by that is you get to take the balance that you have in income summary that we know is $730, and we get to put that into retained earnings. So if income summary has a normal balance credit, you're going to debit income summary for $730, and because retained earnings has a credit balance, you get to put that for retained earnings for $730. Okay? So now, if we were going to do a T-chart for retained earnings, okay, we just credited $730. Okay? Now you'll notice that there's not a problem in this adjusted trial balance for dividends, but I'm going to add one, okay? So you look in that list of accounts, and right below service revenue, I want you to write the word dividends, okay? And on the debit side of the amounts there, I want you to put $300, okay? And the reason I want you to notice this is because revenues and expenses go to income summary to balance, okay? And then that balance is either added to or deducted from the balance in retained earnings, okay? So if you have a positive balance in income summary, you get to add to retained earnings, which is great, okay? And it's possible to have a debit balance in income summary, which means you're taking out of retained earnings, okay? So that's not necessarily good as far as business is concerned, okay? You want a positive credit balance in income summary, okay? Dividends, as we discussed, I think, in the last video, refers to rewarding stockholders for owning stock in the company, okay? You don't pay dividends on an accounts payable, okay? You don't say, well, we'll pay you later, okay? We don't do that, okay? Dividends, when you pay them, come out of what you've made, okay? You're not going to pay them something that you know you don't have. You're going to pay them out of what you know you have, okay? So your dividends are going to come right out of retained earnings, okay? And we know that when you want to close dividends, you do the opposite of the normal balance, which the normal balance for a dividend is a debit, okay? So to decrease retained earnings, you'll debit it. So you've got your retained earnings for $400. $400? $300. For $300. Okay? And now you're going to credit dividends for $300. Okay? And so you now have a debit of $300 over here. Okay? So you have a $430 credit to retained earnings. Okay? And so what we just discussed were closing entries, okay? And that's where you take your revenues and expenses, you balance them into income summary, and then put income summary into the retained earnings. And once you've done all of that, you take your dividends and take your dividends out of retained earnings, okay? So I hope that was helpful. Be sure to be working all of these homework problems again, and I wish you all the best of luck on your exam Monday. Look for the next video will be a problem over chapter 5, okay? So that's dealing with more inventory, and we'll talk about that next time. So have a great afternoon.